I think that you could argue gold isn't competing with treasury bills, it's competing with the long-term purchasing power of fiat currencies, and all of the global indebtedness. And I think, that's why it makes sense that the central banks are purchasing the way that they are. And they've been purchasing more than ever before. In fact, first quarter of this year was the most they've ever purchased in the first quarter ever. Funny thing is, they said they only purchased 16 tons, and the World Gold Council said, no, you're lying. You purchased 15 times that, 240 tons. It's interesting, but I think that's really, that's why I pay attention to the central banks. They're not buying record amounts of gold because they're worried about next month's rate decision. They're buying it because they understand the long-term consequences of too much debt and the steady debasement of fiat currencies. I was watching an interview today between Michelle McCory, my co-host, and Rick Rule, and his assumption is about an 8% decline in purchasing power per year of the US dollar. Well, if he's right, into 72, in 9 years, the dollar is cut in half. And that's assuming everything else stays the same, and we don't see increases in inflation, and we don't see, greater debasement. I think these are all real dilemmas. And when you see the world's appetite for U.S. treasuries waning, becomes even a bigger problem. And so I was listening to Luke Groman as well. He had a very interesting perspective. He said, the world used to want our treasuries, and so we sprayed a fire hose of inflation, exporting it across the globe as those countries readily took our debt and allowed us to live this extraordinary, exuberant life. But now that's not wanted so much because of things that we've done with weaponization and fiscal and monetary, I guess you could say, instability or poor decision making. But anyways, so he says now it's like taking that hose and bending it into the basement window and flooding our own country with this inflation, as otherwise rates are going to go up. And so, and they're trying to change the rules so that the banks can continue to buy more treasuries, So it's a situation where if rates go up, the whole game ends. And I think that's kind of the picture here, is that if you believe that, and also to Luke's point, this reindustrialization trend, it started under Trump, but he says that Biden actually brought back more manufacturing than Trump did, and which I found hard to believe. He said a lot of it was related to green and whatnot, but that he thinks it's a decision that is being made from, the industrial complex, the military, and the way above, and this is something that we need for national security. So in order to reindustrialize the country, we can't have a strong dollar. We can't have high rates. That's Triffin's dilemma. We'll go nowhere. So by allowing the rates to go lower and easing up, if you will, is something that could be very dangerous. You're going to reaccelerate inflation. So does there need to be an event to gather enough public will behind those kinds of decisions? Maybe not. I don't know. But I don't think that there is any path that gets us where we're going without inflation being a buzzword and something that I think is only going to get worse. And all of this stuff that we're seeing in Hormuz has a lag effect. We haven't seen it yet. We should very well see much higher price inflation into the second half. So yeah, holding your wealth in dollars is a mistake right now. And maybe that's why you're seeing an acceleration by the central banks very quietly, purchasing the most gold in the first quarter ever, and then lying about it by a factor of 15. So, and now we're beginning to see things take shape to your point, in China, with Hong Kong developing a new exchange where price will be set. To go hand in hand with the infrastructure in Dubai and in Singapore, St. Petersburg, Mumbai, Brazil. All of these countries are building vaults. They're building settlement systems. And these are the rails, the arteries of a new system. I don't think all of this gold moving from west to east, our largest export for the last 6 months has been gold. I don't think it's gold moving from west to east per se as much as it is a new system, slowly, a settlement system in commodities, moving from west to east to places like Hong Kong where they will settle like that. And it will be immediate cash and carry type of thing. As of the 24th, what you're seeing is the elimination of the largest banks are telling their retail clients they can no longer do forward selling. They can't do futures. And so you can still buy gold, but it's for like immediate delivery. It's not playing the futures market. And what they're going to try to do, I believe, is eliminate those entities that don't have legitimate hedging purposes. You can't just roll a huge amount of short positions forward. You can't do it unless you are a legitimate hedger for some reason or another, and that will create real price discovery, hopefully. The more of these exchanges that we see across the globe that are more about real price discovery, the less reliant the world will be upon the CME and the LME, the London Metals Exchange and the COMEX. And maybe we will actually see real price discovery at some point. So it's a slow moving process, but you can see the steps or the pieces are being put in place for that to happen. Maybe that's why you saw a large portion of the JP Morgan trading desk move to Singapore. These are all little pieces of the same puzzle that are kind of coming together. But I guess more than anything, I think about this a lot, and could this be preparation for a more multipolar monetary system? Maybe. But I think that when we see all of these things happening at one time, it's far more than the footprints are unmistakable. When you see record central bank buying, when you see record repatriation, we've heard a lot about India and France, Germany, and all these countries repatriating their gold, the new physical exchanges, alternative payment systems, Mbridge and SIPs, and a steady migration of gold from west to east. Those aren't isolated events, man, and they're pieces of the same puzzle, and I don't think we're anywhere near seeing what that puzzle looks like yet, but you can see that these things are taking shape, and I think will be significant over time.
I agree. What we're seeing too with what China's trying to do is they're really, we've had a lot of focus and conversation on cryptocurrencies, stable coins, CBDCs, being the world reserve currency for a long time. Like you mentioned, we've exported our debt. We've also exported our dollars out. That's been our number one thing that we're exporting. That allowed us to basically have everybody in the country that wants a granite countertop in their kitchen to have one. Everybody gets to have a car or two. Everybody gets to have new iPhones, all that kind of stuff. The reality, though, is most everybody's in debt.
That's what I'm glad you said. That's the reality. When my grandfather was young, I remember him saying to me, he never bought anything unless he had the cash, a house or a car.
Exactly.
Now their birthright is to go into debt. I'm glad you brought that very valuable point up. And it's been financed by the rest of the world.
It has been. And so what's happened is when the country started doing that, we were taught how to do that too. And we were allowed to do it. We had really low rates for a very long time.
Incentivized. Remember your first year in college? Those booths set up all over the campus. Get a free sweatshirt for a credit card. It's like you're a freshman and you got $8,000 in debt. Say, oh my God, what the hell did I just do? That's a lot of beer. I can't believe I drank that much.
Well, and it's all high interest rate stuff too, right? So it's crazy. And anyway, everybody's set up on that, right? So we're all in these positions now. A lot of people look at it and they say, hey, I've got a 30-year mortgage and it's a fixed rate at 2.5% or 3%. And they're really excited about it. What they don't realize is they're going to pay for the home twice.
Right. Even at those low rates. And if you'll notice that most of the credit cards are divisible by 72, either 18 or 24, and why would that be? Because the rule of 70 seconds, you take 18 or 24, divide it into 72 in 4 or 3 years. If you just pay the minimum interest, your principal doubles. And so, this is a whole generation that it's their birthright to get into debt. School debt, credit card debt.
Yep.
mortgage debt, car debt, on and on and on and on. And yeah, that's a problem. That's a very big problem in an environment where rates potentially go higher, because not only does it make it more difficult to service the debt, it squeezes the economy, and you end up seeing, layoffs and slower business cycle. And then it really becomes, even that 2.5% mortgage that's so great, you lose your job. What are you doing? And because people they've blown through all their savings. So it's a bad thing to be this in debt, and in particular at the foothills of an environment where rates could potentially go much higher, dictated by the market because of the fiscal irresponsibility that we've shown, and because I think the world realizes that we can't do austerity. If we do, we blow up the entire system we're trying to protect.
I agree, and the system's created that way, right? There's an incentive for you to have a mortgage on your home. You get tax write-offs, all these other things that go on. And the other thing I'll just put in there about inflation is, if your W-2 income, if your company gives you a standard of living increase, it's all based on the CPI numbers, which are not correct either. So you get the CPI number that basically says 2.5% inflation when there's really like 5 or 6. And so everybody's feeling it today. I look at gold and silver in particular, and majority of what I've purchased, almost I'd say like 80% of it, maybe even more than that, was purchased at numbers way lower than where we're at now. So I'm still way up, and it's nice to be up way higher, and we will be in the future, I believe. I see this as a good time to buy. I see this as a good time to consolidate. Maybe there's something you don't like, swap it out. I think it's a good time to kind of consider what your ratio is with gold, silver, and other metals, as well as your net worth. And, to me, metals are still very liquid, yet they haven't lost the purchasing power like the dollar has. Now, if you bought at the top, you're going to have to wait a little bit of time.
There is something that people should know about. I've talked about this on a few shows, and it got a lot of buzz.
Okay.
Were you ever a stockbroker?
No, but I worked with a lot of top stockbrokers in the past.
Do you know what the 30-day wash rule is?
I'm familiar with the term. I forget the exact, but I think it's where you buy it, you sell it, you can't rebuy it for 30 days.
That's right. So if you have a security and you sell it and book a loss, IRS regulations say you can't buy it or anything similar back for 31 days. That is the wash rule. The theory, you just sell an investment property for a $2 million gain. You bought SpaceX at the top, and you don't want to let it go. You could sell it right now, take that big loss, book that loss against the capital gain, and then buy it right back, as most brokerages don't even charge people for the trades anymore, right? It's management, money under management. Well, the IRS says you can sell that and book that loss, but you can't buy SpaceX back for 31 days. Well, you're thinking, shit, it might go way up by then. I don't want to do that. Well, that's a securities law. Does not pertain to precious metals or commodities. So if someone bought silver at $100, they could sell it. Now, the key is that custody has to change. It can't be done half-ass. So either it's in a depository where it just simply moves from one account to the next, or we help people send it back. They book the loss. How is that loss booked? We buy it back from them. They have every legal right to buy it right back. Now, you can write off that loss. It would be short-term. It would be regular income otherwise, but there is a formula that you can write it off against long-term capital gains. I don't know exactly how it works. Talk to your accountant. But the bottom line is that you could sell and buy it right back, carry that loss forward, or write it off against capital gains.
Yep.
And then the cool part about it is that you will have never wrote a check out to repurchase the metals, because you sell it, and then we use the proceeds of that sale to immediately repurchase it. The loss of privacy in and of itself in buying metals is writing out a check or sending a wire. You show your accountant, this is what I did. You have no obligations to show what you did with the proceeds. If you ever had to show, here's the receipt. I just exchanged it for this. I decided I wanted to buy it right back. I changed my mind. That's legal. So it's also it's legal with crypto because they have been viewed as personal property. It's a loophole that I can't imagine stays open forever, but it's called the precious metals tax swap. I have a legal opinion. from what's the name of it? CBIZ? It's a national accounting firm that says, it is only directed towards, in the law, towards securities. So book it, right? Take the loss, do what you want with the loss, take the proceeds and repurchase the metal. It's going to cost you a couple % to do so, but you never wrote a check out to repurchase the metal. You receive it back paper trail free legally, and you get that loss. So just a little bit of insight for people who may find themselves in a position where this is something that would help.